everyone. Welcome to the morning call. I'm Laz, filling in for Scott on this Friday morning. And what an interesting Friday morning it has become. Headline, news out last night out of Europe, pushing this market substantially higher as we speak. Pre-market, I think the S&P futures are up somewhere between 18 and 20 handles, and the NASDAQ futures up a whopping 40 handles. So lots of overnight price movement, and what a difference one day makes. We are in a volatile market. We can take a look here at the S&Ps as there's just a lot to discuss here. Lots of volatility. If we go back through the month of June, and we go back here, roughly the beginning of the month, you can see a lot of volatility. A lot of up, a lot of down, but not a lot of direction. So let's, basically classify the month of June as a volatile month, but a non-directional month, at least in the S&Ps. We have what has become a little bit of a floor of support down here around the 130 mark in the spot. Again, these are the SPYs. And then on the upper band, you'd say probably around 135 and change. So we're still in that range this morning. S&Ps basically back into the upper area here on this overnight gap. And we can take a look at that in just a sec. What do you do here? Well, we talked about the flat 21. I talked about it in the morning call a few days back, or I'm sorry, the recap a few days back. And you have this flat 21 EMA, and it's producing a lot of volatility, but not a lot of direction. And we expect that that's probably going to continue until at some point it doesn't continue. So I wouldn't get worked up about one gap up or one gap down. The market really needs to, show itself over a sustained period of time. A lot of traders getting caught in this volatility, expecting, breakouts or breakdowns, and it's just not happening because, again, you have so much, headline-driven news. And it seems like sentiment changes from almost one day to the next. Yesterday, market looked like it was about to fall off a cliff, through lunchtime yesterday. And fast forward to this morning, we are now back at the higher end of the range. So it's amazing the dynamic that's happening here. And really, this tape is really built for, the shorter term players, the day traders, the traders that take on pockets of smaller risk and reward, looking for more opportunity than someone who's more macro in their positioning, and looks for, longer term gains. This is not that kind of trading tape, not that tape, for that type of trader. So embrace what you have and understand what it's giving you so you can position yourself accordingly. With that being said, let's take a look at a smaller time frame. This is the same chart, but really a 13-minute view or a 15-minute view. And basically, if I look at pre-market here, which I will in a second, we are back around 135 and a quarter, and you can see this, shorter term chart just giving you more of a sort of the ebbs and flows. This is the higher end of the range here, that 136 in the SPYs, and we're right now around 135.30, and this is where we were yesterday around 2:30, close to that 3 o'clock area, right around 131 in the SPYs. So basically a 40 handle plus move between the last hour of trading yesterday and pre-market this morning. So a lot of volatility in here, and this is a tape you need to be careful, especially if you're putting on a lot of risk. Like I said, really built for more of the nimble active day traders, and a place to be, quite honestly, on the VTF, because opportunity is happening intraday right now, and really intraday only. So we're going to keep an eye on how this reacts up here into this upper band of resistance into the 135, 136 area. Real time, there could be a trade to the short side here into resistance. Like I said, it is the end of the quarter, and typically at the end of the quarter you have window dressing, and that sometimes stocks get marked up into the last day of the quarter. So as we approach today's trading action, just remember that, I think less is more right now. Day trades are the path of least resistance. Find small areas of risk. Let's take a look at some other stocks. I'll go back to the regular charts here. We can take a look at some other things that are happening. Some stocks that I think are noteworthy are Chipotle. Here's one stock that's been a high flyer, breaking down out of a multi-month base. You can see this multi-month base right here, and breaking down very aggressively. Notice the volume here on this breakdown. This is something we talked about. I didn't quite expect yesterday to follow through the way it did, but when there's a need or a desire to get out of a position, the stock can just unwind, which is what you see happening here. Now, into the 200 EMA, you can see this black line. This is our 200 EMA. in the low 370s, a little bit of a tail up off that level. I think some traders might look to poke, on the long side here for a trade, maybe a few days of consolidation, or even, some slight retracement here back into resistance, which we can call right around the low 380s. Pretty stretched here in a very short amount of time, so it wouldn't surprise me if you saw a little backing and filling or some consolidation here off of that lower 370 area. But this is a stock you want to keep on the radar, as this type of move usually signals lower prices to come in time. So we're going to keep an eye on Chipotle, as there is room to fall. Our first area of significant support would probably come around 350, back down in this range. So we're going to keep an eye on that. In addition to Chipotle, let's take a look around the horn. Nike down a bunch this morning. We can take a look. Let's take a look at a pre-market Nike. There you go. Again, I think it's interesting to look at pre-market now, because, again, stock prices have moved so dramatically in the pre-market. Nike trading around $86, $87 here in the pre-market, so really taking a haircut, as the stock will be somewhere down around here. And it's amazing. It was only a matter of, a few weeks back, we were sitting at 52-week highs. So things are changing. Things have changed, and you have to be cognizant and understand this is probably an area where, into support, you might see, some bottom pickers come in and look for some sort of bottoming type of price action in here for a trade back up, as the stock is pretty stretched here. But that's a reversal trade, a little bit of mean reversion, and probably something you want to tune into the VTF for actual, setup and structure. But something to keep an eye on, like I said, into the next couple of sessions. Banks, Goldman. Again, that level at 90, still tradable. Down here you can see we made a low, retested. I'll make it a little bit bigger. Held in nicely yesterday. Not much enthusiasm to the long side, but again, a long against 90 could be an interesting risk-reward scenario. The stock would really have to break out of this base to really warrant a whole lot of, enthusiasm to the upside. But it's something worth watching here on the lower end of the range for a long. Again, this is a weak stock, so counter trend trading is definitely a more difficult type of trade. But as long as you can define your risk and it's calculated, it does make sense for some of the shorter term traders. JP Morgan still holding in and basing in here. Not much to say about JP Morgan. It's, again, just a bit of a retracement. I wouldn't throw a lot of exposure here to the long side, but against this lower pivot, it is calculated. That's around 34.5 plus or minus, somewhere in this area. You can see it's, held in for the last couple of sessions, but not really doing much. And again, we'd like to see it, an enthusiastic break of this range to the upside if there's going to be, an opportunity to fill this open gap back here, in that 40 to 41 area. So keep an eye on some of the banks, as there are some calculated trades potentially developing there. But again, nothing I would get very excited about. But again, just like Redler would always say, cute longs, and some cute trades in there for the tactical players. Moving along, Priceline, another interesting looking trade. Priceline, one of these, one-time high-flying leading stocks. Double topping back here in April, May, really getting hit pretty aggressively. A little bit of a retracement we saw, a little bit of a flag type of situation. Broke out of this pattern a few days back. This is one I would keep on the radar for lower prices. Again, it is a wild stock and can have large price movements in short amount of time. But this to me looks like it has the earmarks of a stock that wants lower, and I would keep an eye on it. You have this open gap back here, down below 600. That probably would be your first target to the downside. So a trade that I think, for those that are looking for some shorts, some calculated shorts, keep an eye on this one for lower prices. As some of these, one-time high flyers, like I said, Chipotle, Priceline, even MasterCard. MasterCard setting up, MasterCard's held in relatively well, but again, has the ominous looking, bear flag pattern developing here. We did break down out of that, pattern yesterday. So this is something, again, I would keep on the radar for a calculated short trade. I think in this market where it is purely a a trading market. When I say trading market, you're getting a lot of pops and drops and ups and downs. You want to be calculated. You want to focus on near-term patterns, and you want to look for, calculated trades, be it both long and short, to have a nice diversity of trading, so you're not, only looking for one thing. And I think that makes a much healthier trading environment. There are a couple strong stocks out there. We've talked about Whole Foods in the past. Whole Foods tried to break through this level right around 97. And I talked about Whole Foods on the VTF. It's been an interesting trade. We broke down out of this little consolidation area yesterday. So I would keep an eye on this one, as it could be an exhaustion, could be in the, a deeper pullback could be in the cards here. But we'll watch the price action over the next couple of days to really make that determination. Some other good trading areas we've talked about are some of the agriculture names. CF, really coming back from the dead. These stocks got hit very hard in May and have come back pretty deep and retraced pretty deep. A little bit of a tail down here. I would keep an eye on how this plays out. These stocks could use a rest, or some basing action up here if they really want to go higher. Potash, another one, firing back into prior resistance here. If you look to the left, this is going to probably prove to be a pretty formidable area of resistance in these stocks. So I wouldn't be a buyer in here. They're probably more for the day traders right now, for the shorter term players looking for maybe a calculated pullback. But these are stocks that I would keep on the watch list. I said if they can develop some nice bases over the next couple of weeks, you could see potentially another trade develop there. But that's something that I think is going to require more time. Some of those names, Monsanto, Mosaic, Potash, some of the ETFs, AGU, DBA. Again, really more sort of the sector. And you can see the corn commodity. If we look at corn, just absolutely exploding to the upside here. Again, this is something that could require a rest, but there's been a pretty big impulsive run here in corn. It's not something I trade or really spend a whole lot of time looking at, but I am keeping an eye on it, because this is something off of this low here that was you can call a double bottom, just absolutely exploding straight back into resistance. Now it's this is where it gets probably a little more challenging, and we'll probably look for some sort of pullback or some basing action up in this area. So really a wide array of things to look at, things to consider, areas of support, areas of resistance, and trades that we potentially see developing. Like I said, and I'll repeat myself, this is a shorter term trader's tape. It has to be respected as such until such time that it is not. And when it's not, we'll be able to evaluate the signs and the levels to help guide along that path. But if you're looking for something beyond maybe a day trade or a 2 to 3 day window, it's going to be a much tougher type of trading environment for you. Respect the market, respect what it is and what it's doing, and you'll have a much easier time navigating. Scott and I always say cash is a position. If it's not your type of trading environment and you're not that trader looking for the intraday or the like I said, the calculated 1 to 2 day type trades, step aside. Be in cash, enjoy your summer. The market will change at some point down the road. When, we don't really know. We don't have that crystal ball, but there will be that change at some point. And right now, like I said, less is more. Respect the volatility, respect what it's giving you. And if you can embrace it, there's opportunity. Oh yeah, I forgot one thing. I wanted to look at some of the healthcare names, as healthcare obviously is such a prominent theme yesterday. I completely forgot. My apologies. We're going to take a look at some of the managed care names. This is WellPoint. And I'm looking at weekly charts here, so you can get a sort of a good idea of what's going on here. WellPoint has really been in a base since the middle part of 2011. So this is going back at least a year. You can see the upper range, you can see the lower range, pretty clear. Yesterday we saw a lot of volatility with the Supreme Court ruling. We can take a look at the daily. Big down move here in WellPoint. Again, just one of the names I'm looking at. Obviously, the level that everybody sees is the 64 area. So keep an eye on some of these healthcare stocks for a break of the range. Again, the weekly will give you the clarity. We'll look at UnitedHealth, UNH. UnitedHealth actually looks like a stronger performer than WellPoint. UnitedHealth actually closed pretty strong yesterday. Saw a big volatile move down and all the way back up. So keep an eye on UnitedHealth for a trade above the 60. Just above 60, the highs. There could be another trade there. And lastly, we'll take a look at Aetna, just three, the bigger names. This is a weekly of Aetna. Not not quite as strong. It looks like it broke a little bit of its longer-term trend line, or sitting on this longer-term trend line, depending on how you see it. But flirting with breaking lower here on the support line, put in the high back here, sold off pretty hard. And it looks like, make this a little bit bigger, a little bit of a bear flag here on the weekly. A couple weeks of consolidation on the lower end of the range. So trying to break down here, Aetna. So mixed bag with some healthcare names. It is still a stock-specific trade. And yesterday's, Supreme Court ruling caused a lot of volatility in here. Nothing that I would throw a lot of money in or even spend a lot of time with until it becomes a more concrete situation. But again, for those that are really more active and looking for opportunity, just I wanted to touch base on some of the managed care names, as there's definitely a lot of eyeballs in that space right now. So as always, a plan trader is a profitable trader. Tune into the VTF where things are happening pretty consistently and opportunity is being evaluated, on a daily basis. As always, have a great day, and I'll talk to you soon.